So I get asked all the time what my top investments are and what I'm focusing on in the moment, which usually goes a little something like this. Yo, Griffin, take a look at this dividend stock. It's got a 16% yield. I'm retiring next year, baby. Hey, Griffin, you got any hot stock tips for me this week? Yeah, believe it or not, that actually happens more often than you might think. And although I love the enthusiasm and ultimately the goal of my channel and my videos are to get more people interested in finance, well, there are still some ground rules that I personally follow when it comes to my different investment classes, which is exactly what we'll be speaking about in today's video. Hey everyone, my name is Griffin and I hope you're all having a fantastic holiday season. Now in today's video, we're going to be covering 4 of my top asset classes that I continue to invest in as much as possible on a monthly basis to increase my portfolio's income and also benefit from that capital growth over time. And if that wasn't enough, we're also going to be speaking about how much I'm planning to invest into each one of these asset classes over the course of the next 12 months. So we'll kick things off with arguably the best investment that I've ever made and that anyone can also implement to increase their income as well, but that often we sort of forget or discredit because it doesn't trade on an exchange. And that would be the good old investment back into yourself. But to really drive this point home and not sound like a preachy self-help guru, I think it would be beneficial to take you back to 2011 when I was around 13 years old and I had my first YouTube channel filming and editing videos about snowboarding and longboarding for me and my friends. As we can see from that, I've definitely come a long way over these past 11 years or so, and it's kind of crazy to me that some of those videos from back in the day got more views than some of my videos now, but that's beside the point. The point is that I've always been interested in filming, editing, and sharing videos about content that genuinely interests me, and over the past 10 years that has changed into finance as well as investing. And it kind of blows my mind that I'm able to make that what I do for a living and the opportunities that this channel has created for me, including things such as having Kevin O'Leary on my channel over the past year. That's something I never thought would have been possible even a year or two back. It's literally a dream come true at this point. But all of this was only possible through investing back into myself, through investing in education, books, as well as better equipment for the channel. For example, my computer, this camera, the mic, these light rings here, these are all things that I have invested back into myself and back into my businesses in order to create more income, basically turning my thoughts into cash. Sort of. And the reason why this is the #1 most important investment is because investments back into ourselves are pretty much incalculable, right? It's basically impossible for me to calculate down to the exact percentile what each one of these books, as well as each individual decision that I've made over the past, let's say, 5 years of entrepreneurship have contributed to where I'm at right now. That being said, I'm sure Mark Rober could calculate this if he had the spare time, but he's a bit more tied up saving the oceans with Mr. Beast, which, yeah, that's definitely a better use of his time. So that was definitely a crazy long introduction, and yeah, I kind of went on a tangent there, albeit a very important tangent that hopefully more of you remember moving into the next year. Now, the moment we've all been waiting for in the video, let's start covering the 4 top investments in more detail. #1 is passive ETF investing. And before you say, hey Griffin, passive ETF investing is boring as heck and doesn't get my blood pumping, well, yeah, it's kind of normal that this is not going to get you as on edge as investing in altcoins. But don't take it from me, take it from my good friend Warren, who has said time and time again, regardless of where the economy has been, he would recommend that more than 90% of retail investors simply buy the market without trying to be a hero all the time with picking and choosing individual stocks exclusively. And in reality, I think the past 2 years have probably been quite humbling for many retail investors, including myself, but especially newer retail investors that have poured into the markets since the beginning of 2020, where many growth and hype stocks have actually trended sideways and even gone down, despite the actual underlying company performing quite well over the same period. But had we listened exclusively to good old Warren's advice here, we'd be up anywhere from 30 to around 100% on those passive ETF investments. Not bad for doing absolutely nothing. So as we can see right here in one of my TFSAs with Wealthsimple Trade, we have a couple different Canadian ETF positions, such as an S&P 500 as well as a NASDAQ 100 ETF. By the way, if you want to open up your own Wealthsimple Trade account, you can check out the link down below where you can get $25 absolutely for free for opening up an account. And then over here on the other side, we have my TD Web Broker account where I trade within my business as well as some actual US position. So we can also see a variety of different passive ETF positions tracking again the S&P 500, the Nasdaq 100, and then also some small and mid-cap indexes within the American stock market. A handful of my go-to passive ETFs include VOO in the US and VFV in Canada to track the S&P 500, followed with HXQ in Canada and QQQ in the US for the Nasdaq 100. When it comes to US small cap stocks, we have XSU in Canada as well as VTWG in the United States, and then mid cap stocks we have IJH in the United States as well as XMH in the Canadian markets. These are all great low cost and passive index funds that I've been recommending on the channel for years, and despite periods of speaking more about growth as well as maybe some small cap stocks over the past 12 months, I've been continuously investing into these passive index funds as much as I can on a monthly basis. Investment category number 2 here is dividend growth investing, which is just so powerful to grow the value of your passive income in your portfolio, but then also hopefully if you're reinvesting that money back into your portfolio, this will also have a profound impact on the exponential growth of your portfolio's value over the course of your investment career. Jumping back into one of my brokerage accounts here, we can see that in one of my business investment accounts, this is the USD account by the way, I'm generating on average around $250 per month, give or take, even though some months are more than others, which might not seem like a tremendous amount though, but over a year's time, this equates to around $3,000 in complete 100% passive income for, again, doing literally nothing more than holding those companies' stock. And as we can see, some of these dividend positions include telecommunication stocks, bank stocks, a couple other categories, and then also the PGX ETF, which is the Invesco Preferred Shares ETF. Basically, this just allows my portfolio to take in more income on a more consistent basis because preferred shares are kind of like more of a fixed income instrument where dividend income comes in before regular shares do, and this is also on a fixed basis. Now, when it comes down to it though, dividend investing is a pretty broad category, and basically any company that pays out a dividend is going to be considered a dividend stock, even though they certainly aren't all equal. So here are a couple specific criteria that I like to look for when searching for new dividend stocks. First and foremost, when analyzing a dividend stock, of course, we'll take a peek at the dividend yield, where I like to look for companies that have a yield between 3 and 6%. This is a pretty healthy range that usually companies are able to maintain for a longer period of time. Number 2 is what's known as the dividend payout ratio. Basically, how much of a company's net income are they taking and distributing back out to shareholders in the form of dividend payments. So a dividend payout ratio of around 60% or lower is usually going to be a healthy target range. Dividend increases year over year is also something that dividend growth investors want to see. So around 6% in dividend growth year over year is usually a healthy range. And in fact, right now, seeing higher levels of inflation at around that 6% range, a company that increases their dividend from one year to the next at 6% would essentially mean the buying power remains the same. And then finally, of course, in that preliminary data, before taking a deeper look into the company's financials, we want to see a dividend growth streak of, at a bare minimum in my books, 5 years, and the longer the better. Essentially, how many years has this company maintained a consecutive dividend growth streak? Those are a handful of the things that I personally look for when I'm analyzing a dividend stock. And if you're able to find a company that hits most of this criteria, you're probably looking at a 4 or 5 star dividend stock. Now, if you want to take this a little bit further and really understand dividend investing and stock market investing on a deeper level, then I'd highly recommend you check out my full stock market investing course. Actually, shameless plug here, but this is a fantastic course that I've created over the past year, giving you everything you need to know to properly navigate the stock market if you're a new or intermediate investor. Now, personally, over the next 12 months, I would absolutely love to get my dividend income to around $8,000 in the year. And at an average dividend yield of 4%, this would represent a total investment portfolio specific to dividend stocks in the waters of around $200K, which I know is pretty aggressive, but I like to set the bar high for myself so that I can try to strive for those larger goals. And I would highly recommend you do the same. Investment category number 3 now happens to be real estate, both through physical real estate estate, but then also what I like to call paper real estate investing. Now, physical real estate is by far my favorite asset class because as a potential buyer, you get to know all the data and information about the property in question, like the financials, the neighborhood it's in, the tenants, etc. All of this information basically, which would be considered illegal to get your hands on in the stock market. Well, in real estate, you're encouraged to do this, and as a result, you're able to basically calculate guaranteed returns for yourself with a property. In fact, these are what I like to call the wealth building pillars of real estate investing, being cash flows, debt paydown, natural appreciation, forced appreciation through doing strategic renovations to the property and raising its value, and then also you get access to massive tax write-offs when you're a real estate investor. For today's video though, I won't bore you with all of these details. That's what this video is meant for, 20 minutes of pure nerding out on the 12 steps to purchase your first rental property or even first house for that matter. Now in 2022 though, I'm looking to probably add anywhere from 20 to 30 doors to my real estate portfolio, which is going to equate to, probably around like 4 to 6 or 7 properties over the course of this year. And that's going to allow my portfolio to generate a lot of cash flows, which I'm planning on just reinvesting right back into more properties and more stock investments. Now, if you're watching this video in bed right now and you're thinking, well, I'm not really interested in physical real estate, this is where paper real estate investing comes into play, which I've actually also started doing a little bit more of over the past couple of months with a platform called Addy in Canada. And if you're in the United States, you can also use a platform called Fundrise. Essentially, these are platforms that allow investors such as ourselves to invest in specific pieces of property without having to go through the hassle of purchasing the entire property. It's kind of like crowdsourced real estate in a sense. So as you can see right here, this is my account within Addy. Well, actually, technically it's my girlfriend's account because it's not yet available in my province of residence. But as you can see here, I'm currently invested or own shares in 3 separate properties. And what I really like about it is that you can choose to invest in whatever property you want based on various different criteria, the type of property it is, the return on investment that are estimated for each property. All of this is given to you in advance, which I really like. By the way, if you're interested in this type of paper real estate investing, check out the links down below in the description. You can get $25 for free if you open up an account with my link, and actually it costs $25 a year to sign up. That's the only fee. There's no other ongoing fees. So basically you get your first year free. That is definitely something that I would recommend if you're interested. Check out the link down below. Now do keep in mind though that with paper real estate investing, it's not true real estate investing, so you don't get access, for example, to leveraging up your money. You also have usually a locked-in term, and you can't like refinance or play around with your money to grow your portfolio. But still, I think this is a really interesting alternative for people who might not have access to full physical real estate investing, and you can also target a certain type of property. For example, targeting industrial properties is something that I'm personally not doing physically, so this can give you nice exposure to those types of asset classes as well. And finally for the video, investment category number 4 here, we have digital currency. In my case, more specifically, I'm speaking about Bitcoin and I'm speaking about Ethereum. I do have small holdings in other coins, and I'm also looking to further diversify my crypto portfolio this year. But yeah, Bitcoin and Ethereum are the 2 main coins that I'm looking to hold and dollar cost average into over the course of this year and beyond. And by the way, before this past summer when I had the amazing opportunity to interview Kevin O'Leary on this YouTube channel, well, I definitely had my doubts and I was somewhat skeptical about cryptocurrency as a whole. Not necessarily as the entire industry, but just how it could fit into my portfolio as well as most of my viewers' portfolio. But Kevin O'Leary is like crazy bullish now on crypto as a whole, as well as the whole decentralized finance space. And he really opened my eyes as to how regulation as well as some other innovations in the industry are going to really allow more access to liquidities entering into this space. And then that combined with the book that I read, the Bitcoin Standard, really now I'm seeing this more as a hedge against inflation for long-term growth and another asset class that I can have in my global portfolio. I'm not looking at this from I'm going to be buying pizzas with Bitcoin. No, I'm basically just looking at this as another store of value and hedge against inflation, especially with what's going on in the world right now with fiat currencies just going crazy, getting printed like crazy to boost up certain national economies. So yeah, cryptocurrency is also something that I'm looking to do more of in 2022. And if we open up one of my wallets here, which is in Exodus, I am not affiliated with them in any way, but we can see here I have around $8,700 Canadian, that is, worth of Ethereum. And then in another portfolio, I have some small exposure to Bitcoin, Ethereum, as well as Cardano. Now, what's really interesting though about some of these coins is that, as you can see right here, there is a 4.91 APY for Cardano, as well as 6.06% APY for Solana. So that's also something that I'm definitely kind of interested in, considering the fact that these are some pretty high yields. So yeah, 2022, that is going to be also one of my main focuses. And yeah, by the way, if you're newer to crypto investing, make sure to check out one of the links down below to different platforms and exchanges for crypto where you can get some free money for opening up an account, whether or not you're Canadian or you are American. So that pretty much wraps up today's video, covering the 4, or I guess we could say 4.5 different investment categories that I'm focusing on basically always. Now, I said 2022, but this is pretty much always and is going to continue being the case for years down the line. I really hope you enjoyed the video. If you did, make sure to smash a thumbs up and subscribe to the channel for new and upcoming investing content. So on that note, thanks for watching, and I will see you in the next one.